Forex Daybreak Podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, Forex Daybreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 91. Forex pairs in this episode are Euro-USD. We have a rate hike, we have a decline, and we are banking on continuation of this large decline. Dollar-Yen, same here. Rate hike resulted in an upwards move, and we are trading this pair to the upside. Also Pound-Dollar, we are going to figure out what is going on here, if we are going to see a break from this wedge-shaped triangle formation to the downside. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Well, we have a rate hike. Yesterday, FOMC meeting resulted in a decision that the Federal Reserve in benchmark interest rate is now 0.25 to 0.5, as it previously was 0 to 0.25. So a quarter of a point increase in the federal fund rate and the first rate hike in 10 years. So this is quite an important decision. Of course, signals to the market participants that US economy is finally done with the recovery and now are headed into more normal conditions. Federal Reserve Chairwoman Janet Yellen said, of course, yesterday that there's still improvements to be had. The inflation is too low. Also, labor force participation rate is very low. And of course, the Fed balance sheet has to be shrinked back to more normal levels. I think they consider normal something like 1 trillion or a little bit less what it was before the 2008 financial crisis. So now it's 4.5 trillion. So there's quite a lot of work to do if they're going to be shrinking that to anywhere near to that 1 trillion level. And this of course would mean that they need to sell the assets in quotations they have on their balance sheet. So there's a lot of mortgages and similar instruments in their balance sheet. So this is another thing altogether. But now we have a rate increase, highly anticipated rate increase has finally been made. And this signals, of course, that US has now successfully stimulated their economy. They have printed a lot of money, and this has mainly gone to the equity markets. Dow Jones and S&P 500 have risen very much during this recovery and this money printing. So this is the case when you print money, when you increase inflation. The money has to go somewhere. In this case, it has gone to equity markets. And of course, the plan at the start was that there is going to be a trickle-down effect. This wealth and this money is going to trickle down to the normal, regular economy. I think this has not been the case. The data shows that there is only inflated asset prices, nothing more. So I think the Federal Reserve have a lot of work to do still if they are going to declare a victory from this recession or this recovery. But the rate increase is the first step, or one of the first steps that they need to make, and now they have made this. They also signaled that they are going to be doing more rate increases during 2016, but let's see how the equity markets react to this 0.25% increase first, and then we can maybe start to speculate when and if they're going to make any further increases. But we are mostly interested in the Forex market, and let's dive right in. Euro-USD, in my opinion, a little bit a little bit muted reaction to this rate increase. Of course, this has been maybe priced into the market a little bit before, but still, if we compare this to the ECB news release, if we just look at the news release and the news events, so ECB a couple of weeks ago, they did not lower the rate enough, and this resulted in a 460 pip advance. Now, yesterday, Federal Reserve, they raised their interest rate 0.25, and I think actually this was a little bit more than some were anticipating, and this resulted only in maybe 200 pip move. So a little bit strange, and of course I have been talking about this before, that if you trade the news releases, there is no logic in this. You have to have some other means of analysis and some other means to read the market movements, and I think Elliott wave principle is the best way to do this. Of course there's a lot of other methods of analyzing markets, but I think if you take the effort to learn Elliott wave principle well, and then mix in some fundamental data, learn about the real economic figures, learn about what they really mean, then you can do much better analyzing the markets than just relying on the news and mainstream media. These are very confusing signals usually, and like we see in this comparison, if we take the rate hike now, yesterday made only maybe 200 pips, and the ECB release resulted in 460 pip move on quotations wrong directions. So don't trust the news. You can of course trade the news. There is pips to be made, but the logic is usually off, and you need some other indicator, some other method that you use to determine which will be the direction from the news release, and then you can maybe trade these. So we had a trade yesterday and have trade still running in EURUSD. It's now a little bit over 100 pips on the profit. So I'm satisfied of this result. I watched this news release yesterday, and I was a little bit surprised that the market reaction, at least in the forex market, was so small and quite contained. So I was expecting a lot more volatility, but I'm happy on the results. I lifted my stop losses quite high. Actually, I lifted the stop loss above the 110.87 level. If the markets would have gone up yesterday after rate hike release, this is the level where waves 1 and 4 would have been overlapping. So that would be the level which would have meant that my wave count is wrong. But we got rate hike, we have more downside, 100 pip profit, and this can be entered. I think there is going to be more downside. In my preferred wave count, we have started the minute wave 5 decline, and we are, I think, in minute wave 3 right now, perhaps, or even 1 degree smaller. Waves 1 and 2 have been completed. Let's draw it here. So I'm expecting now a 5-way structure out of this decline, which I have marked started near 110.6 level. So waves 1 and 2, now the rate hike peak, and I'm expecting more downside. Wave 3, perhaps a sideways corrective wave 4, and then more downside, and new long-term lows perhaps should be expected. At least 105.2 is the level which I think will break on the next larger 5-way structure. So we have one more 5-way structure to go in this larger degree first wave. And if we take a look at the third wave, which is quite short compared to the first one, we can maybe expect an extended fifth wave. So there can be a lot more downside expected in Euro USD. So my trade is running. I'm not sure how many of my signals group have the same situation, but if you have the trade still running, I have lowered my stop loss to break even. So now we can just write this third wave down and perhaps close it near the fourth wave. We can look this, of course, during the day. If there's turnaround and this starts to climb higher, of course we can then close the trade. But I'm expecting now, since we have the rate hike business over, I'm expecting quite a normal conditions and a decline. The third wave should decline more, perhaps near 107, 106.5 levels. And then we can expect a sideways corrective wave 4, which would be one target for this trade to complete. All right, let's look dollar yen. We have also a trade here. At the moment, 90 pips on the profit, 85 pips on the profit. So I have two trades running right now. From the rate hike, I kept dollar yen and euro dollar. The price structure, the wave structure was or made more sense than in the other pairs. So other pairs, the trades were closed, but in dollar yen and euro USD, I kept the trades running. So perhaps we can now see a completed five-way structure in dollar yen. So from the low of 120.25, we can see waves 1 and 2, then maybe 3 and 4, and now maybe we can expect a correction next and a decline perhaps near the levels of the yesterday's lows or yesterday's price action. So 121.8, 121.7, perhaps this next correction can take us. But in my opinion, we can expect a lot more upside on this pair if the wave count I have on the charts is correct. We have just finished a minute wave X, 3-wave structure, and can expect next an ABC structure to upside, maybe similar than the one from 118.06 all the way up to 123.74. So maybe we can expect a similar structure now to the upside, and of course can open up a very good trading opportunities on dollar yen. Let's look at pound dollar also. The rate hike has manifested as a decline here as well. More downside is expected here as well. Pound dollar is still between the triangle trend lines that have been the resistance and support levels for quite a while. So I would like to see a decline below this trend line, this lower trend line, before making any trades in this pair. We are nearing this line, and we can perhaps expect this line to act as support, and maybe fourth wave correction will be witnessed then. So if we take a look at this structure from the previous peak of approximately 152.3, we can see now maybe waves 1 and 2, now 3 and 4, maybe we will see a decline towards the lower trend line, then sideways correction, and then a break below that level. I would like to see a break below that level before trading this pair, since this has kept the price action contained between the trend lines quite a while, actually few months. So the break below that line would signal that the next larger decline has continued or has resumed or has begun. My wave structure is putting this decline as third of the third wave. So we can actually label. So we have a minute wave 2, we have a minuet wave 2, now we have a sub-minuet wave 2. And so third of the third wave down is what we are dealing here right now in my preferred wave count. So I'm not going to enter any trades right now into this situation, but I will keep an eye on this pair and try to catch the next wave down once we see a clear break below the lower trend line of this triangle. Okay, that's all for today. Visit the show notes at forexdaybreak.com/91. And again, let me remind you that you can get this video analysis, daily trading signals, weekly future trades video, books and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month, and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Go to forexdaybreak.com/basic and sign up today. Okay, more trades tomorrow. Happy trading, and I will see you next time. Bye-bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.forexdaybreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.